Alrighty, I think we are live, Tim. Thank you so much for joining me.
Hey, thanks, Logan. Happy to be here.
Awesome, awesome. Well, how's the week been?
Not too bad. Really busy. We're
Hmm.
in the middle of getting ready to take down a property in Richmond, Virginia. So
Okay.
creating all the investor materials and everything. So
Yeah,
that's uh that's always pretty time consuming, gathering all that data and putting it together.
certainly. So, I mean, I'm sure a lot of people would like to kind of hear how that process really kind of works. I mean, many people probably don't really know, process of tearing that down. Are you planning on like restructuring it, building something new there, or?
So the property in Richmond, no, it's actually a pretty historic building.
Mhm.
It was built in 1870.
Mm.
Um, a lot of a little history here. Like a lot of people don't know that,
Oh, for
like
sure.
in the Civil War, downtown Richmond was basically burned.
Okay.
So you'll see a lot of areas in this Shaco area of downtown Richmond that a lot of buildings were built from like late 1860s through the 1890s,
Right.
and this is a building that was built in 1870. It's got a great front on it, granite front,
Okay.
stone front, brick building. It's got a lot of really cool bones.
Mm.
So we're gonna largely leave the building as it is. We're gonna go inside and do some additional renovations. The building
Right.
was renovated in 2017 and
Okay.
brought up to a pretty good level.
Mhm.
We're going to take it up to another level.
Right.
Um,
You're
starting
going to take
probably.
it up to the Harvest Properties Group level.
Yeah, my partner Robert Musso and I would say, yeah, we're going to take it up to the Tucson harvest
There you
level.
go.
But
There you
but
go.
yeah. So it's probably a solid B minus on the inside right now.
Right.
If we're talking asset class, um, it's probably a solid B minus. We're going to take it up to a good A. Probably not the ultra luxury level, but a good A
I
property.
was going to say, you
Um,
can go S class, Supreme. Yeah.
yeah, and this whole area in Richmond is just it's a really popular area. It's down near the river.
Hmm.
It's some of the old streets from the 1800s still have the cobblestone. In fact, the alley right beside this place still's got the old cobblestone alley and
Oh,
cobblestone
see, that's
streets
super
going on.
cool.
Yeah,
That's super cool.
yeah.
In
So
Spartanburg, we don't have that. Although I will say we're growing. We're growing. You and I spoke about this a few weeks ago. Spartanburg's. But I think you're more looking at kind of the Greenville area. That's kind of where you see a ton of promise, right?
yeah, so I guess middle of last year we were really close to taking down a property in Greenville,
Hmm.
and since that time we've continued to look for other opportunities there. But we have been pushing more into the Spartanburg area and then down further south into Anderson.
Right.
So we're very very interested in kind of that whole Spartanburg, Greenville, Anderson
Hmm.
area. To be honest, I
Hmm.
think Spartanburg's got a lot of promise. Um,
I
there's
think I think it I think it does too. As much as I kind of joke about it, when I look back when I moved here back in 2007. I'm from Minnesota. I actually lived in Minneapolis when I was really, really young, and my parents moved down here, and they chose Spartanburg. And the growth that I've seen at least over the past 5 years has been incredible. Much more industries coming in,
Mhm.
more people are seeing a lot of value here. Um, as I've also mentioned on the last call, I was at a chamber meeting. This had to have been 6, 7 months ago. One of the city planners, she was saying that a lot of people are choosing to kind of come south of Charlotte more and more, and even so, might even cross the border into the Gaffney Spartanburg area because they're seeing more value there than they are potentially in Charlotte, and they don't
Sure,
mind the 45-minute drive or whatever it may be to
sure.
get to work and commute. So I am truly seeing a lot of growth here. They're working on the highways. More buildings are being structured, and I would actually, if you're interested, I don't know, they renovated a big building in Spartanburg called the Montgomery Building, and they have done a fantastic job with that. I'd take a look at that if you're ever interested, just to
Which
see what's going on.
so I'm fairly familiar with the downtown. Is that in downtown Spartanburg?
That one, yeah, that one's properly in downtown. Maybe which street is that? I'm bad with streets. I'm a more landmark kind of guy,
No, that's
but
fine.
it's downtown.
Yeah.
Same road where Wofford would be on.
Yeah, and by the way, I'm a landmark guy as well. Like, you ask, somebody, been going somewhere 10 years, and you ask me what street it's on, and I'm like, I don't know, but I know you go past the Cashin's gas station, you take a right, and
There's a big tree
yeah,
about a mile down the road.
that
You
kind of
take a
thing.
right. You're gonna take a right there. Yeah.
Yeah, absolutely. Man, you're talking about improving the roads and stuff. So
Mhm.
I've had to take that. Yeah, everybody, I think a lot of people are familiar with the term 85 from Charlotte to Atlanta. It's the
Yeah.
Charlanta corridor, right? Everybody calls it that. I've had to do that a lot lately. Man, that run right before Greenville, Spartanburg area down
Mm.
85, man, it's like a bull shoot. They get you with those barriers on both sides. You're in a
Yeah.
lane and you can't
Yeah.
get out for 10 miles.
Oh yeah.
I'm
Yeah.
just every time I go through there, I'm crossing my fingers, like, please do not let there be an accident in one of those things.
There always seems to be.
Yeah.
Um, and I wish they probably would work on a lot of the potholes and stuff. And people joke that North Carolina has the smooth roads, and the moment you cross the border, it's going to be shaky and rocky the
Yeah.
whole way through.
So
But like I said, I see a lot of momentum, and I think one of the reasons I wanted to bring you on today is there is so much change after what we had last year with COVID, right?
mhm.
Specifically, a lot in your own industry, where we're seeing this migration, specifically from a lot of these larger cities. Might you say LA, maybe Chicago, maybe New York, that they're starting to come down into not necessarily just the South, although I think we are getting a lot of that. I'd love for you to speak on what you're seeing and what you've experienced over the past year on how COVID has maybe changed. Because from what you've said is, and what I thought was interesting is residential's done really well, specifically
Mhm.
in the areas that you work in, which is like North Carolina, South Carolina, Virginia, as you mentioned, Georgia, Tennessee, even. And you even said you're starting to get into Alabama, right?
Yep. Yeah.
Yeah. But even commercial, you said, is actually, because I would have thought that commercial is going to be having a big problem, but you're saying that in those areas that commercial is actually pretty good, and if not has some value.
Yeah, yeah, definitely.
Yeah.
So, commercial's pretty broad, right? But
Hmm.
definitely in that commercial residential space, like single family home values in the South are just blowing up. I mean, you see open houses and there's lines, literally lines around the block for an open house.
Oh yeah, yeah.
And then I talked to a broker buddy of mine the other day who only does single family, and he has a pocket full of investors that
Mhm.
it's crazy how many things aren't even hitting the market, because when he gets a listing, he
Mhm.
reaches out to his investors, and his investors will pay cash for them 10,000, 15, 20,000 above asking before it ever hits the market.
Right.
um, so single family residential is going crazy. um, I know just personally, I refied my house last July 2020, and
Hmm.
just in the amount of just since then, so we're in April, just since last July, my home value has appreciated more than $100,000 in a year, less than a year.
There you go.
It's
Yeah.
nuts. So, but on the commercial side, commercial residential is doing really well.
Mhm.
And I think there's a few reasons for that. There's sections of commercial real estate that are not doing so well.
Mhm.
Obviously, retail, hotels have struggled. Although you're starting to see some retail bounce back, and quite honestly, I haven't ventured into it just because I don't know a lot about retail. So I tend to stay away from that, and I don't think now's the time for me to go learn.
Mhm.
Um, but on the retail side, there's obviously opportunity there.
Mhm.
It's just I don't know where that opportunity is going to be. I'm very scared of large retail buildings, like a big building
Oh
in
yeah.
downtown Charlotte. That
Yeah.
scares me because I think there's a lot of big corporations that are not going to come back into the office 100%.
Right. I totally agree. When
Um,
I'm thinking about a lot of the big box stores, let's look at like a Dillard's, a Macy's, anything like that. When you're looking at, I would even say like malls in general, I think they're probably going to be hit the hardest. And if not, we probably won't even have them. I do think that something like a strip mall maybe
mhm.
might be more appropriate. A boutique shop, I think might be successful in that space where maybe they just don't have a large online presence, but they have things that you really can't get. And then also to service that immediate need. Back when I was in college, they were just starting to talk about how Amazon is building up their brick and mortar stores, those ones where you walk in and you can just walk out without talking to anybody. And I would say part of the reason they're doing that is that when you take a look at Amazon versus Walmart, the big problem that Amazon can't solve at the moment is that Walmart has that immediate need factor. If I have a headache, I need to fix that now, not Amazon Prime it in 2 days, right? I need to go get my ibuprofen
Right.
or Advil, right? And so that's why I think Amazon is really starting to get into that space where you can buy groceries, over the counter medicine that you can fix that immediate need problem, right? And I think that's kind of where retail is more going to focus on. But when you're looking at clothing stores, it's tough. I can't remember the last time I walked into a store in the past year to buy a shirt or anything like
Yeah.
that. I'll just buy it online and try it on. If it doesn't fit, I send it back.
Yeah.
Now the cost on Amazon for that, I don't know, but they're obviously doing pretty good. So, but I totally agree with you. I think there's certain spots. Now, more specifically, I'm curious, do you think that the areas that you'd usually deal with, like North Carolina, South Carolina, are they experiencing, like you said, the uptick in that commercial space? And when you look at something like New York and those bigger cities, are they really having a problem, or do you think it's almost the same across the board?
No, I think it's area by area.
Yeah.
You're definitely seeing migration out of New York. Although New York's one of those that if I was an investor looking for something to get into at a deal and hold it, New York's a market I would absolutely look into.
Yeah.
The price points for me, they just don't work for me.
Hmm.
If I was okay with those price points, I'd be buying in Brooklyn and in Manhattan all day long.
Sure.
Because I mean, you're seeing prices in New York City that we haven't seen in decades.
Hmm.
At least on a yeah within for a long time, especially in the hotel space. Hey, if you're looking for a hotel, there's some deals to be had out there if you're willing to put that kind of money down.
Hmm.
But I think you're seeing a lot of migration out of New York City. New York City is one of those places that I feel like is always going to come back. Um,
I agree.
you
I
can't go
agree.
wrong there. Like my daughter's 13 years old, and I remember when I was 13 years old, I wanted to live in New York City.
Mhm.
She's 13, she wants to live in New York City. I think that's always going to be an attraction to it, right?
Yeah.
Um, but
Yeah. There's so much to do there, so much to see, so much history
right,
behind New York. It's kind of hard to just say that it will never have, or that it's going to lose value.
yeah,
You can make an argument. Is it worth what it was 2 years ago? You could probably say it was inflated.
right,
Um, but I think it will always maintain a
right,
certain level of value. And like you said, if it hits the right price point for you, you're willing to buy.
right. But then you see companies like they say like Facebook. Facebook has been using over the last year. They use this as an opportunity to get into New York City and buy more real estate.
Mhm.
They're buying up office space. I don't necessarily think Facebook's doing it because they're going to put a bunch of employees in New York City. I think they're doing it to add to their portfolio.
Oh, for
Um,
sure.
you
For
know,
sure.
hey, maybe they're
Uh,
maybe they're going to grow by 5% in New York City, but they just bought 100% more space. Well, guess what they're going to do with that extra space?
mhm.
They're being smart about it, and I
Right.
think there's a number of people who are, and we're definitely seeing migration down here from from the Northeast down to the Southeast.
Mm,
And we're seeing how it's impacting prices.
mm,
There's a lot of like here in the Charlotte area specifically, we're seeing like per unit prices on multifamily apartments. They're
mm.
skyrocketing.
Right.
And I can't tell you how many times in the last year I've been in, say, the negotiation round of submitting a letter of intent and LOI,
Mm,
and a broker's come back and said, "Hey, you're bidding against this guy from New York City or New Jersey, and he's willing to pay 160 a unit." And I'm like, "But this place is not worth 160 a unit right now. It's worth 120."
right.
But their point of view is different, right? They're used to paying 300 a unit, so they
Mm.
come down 160 a unit seems like a steal, so they'll pay it. um, Not bad for a long-term strategy, I guess, but I can't I'm not in a position to overpay today.
Do you feel that that is causing a sort of bubble? Because we're experiencing somewhat of the same thing here in Spartanburg. I mean, people are listing houses, and within 24 hours, they've got 5 offers and $15,000 over asking price. It, how big of a problem is that? And then, especially when you look at, and I'm curious to also hear your opinion here with interest rates. Now they've kind of stabilized since the recent rise, but for the most part they've kind of maintained for a while, for a couple weeks. Do you see this as a potential mild bubble? Is it big, small?
So I'll answer it two ways.
Sure.
And I'm not a single family expert, so this is just an opinion.
Mhm.
I think on the single family side, I was involved in real estate in 2008, 2009.
Mhm.
I was on a bad side of some transactions there. So I was hit by the bubble in
Okay.
some ways. This acceleration in real estate to me looks very different. In 2008 and 2009, you had people who were making $40,000 a year buying 3 homes.
Right.
They were getting banks
Right.
were giving them everything they could. There no doc loans were all over the place. Stated income was accepted. Banks are being much more diligent this time. They're much more strict. I mean, just from a personal standpoint, when I went through my refi in 2020 on my house, it took me 60 days of back and forth providing documentation.
Yep. Me
And
too.
I'm someone with over 800 credit and no personal debt to my name.
Mhm.
So I, that's they're being pretty strict on who they lend to, at least in my opinion, in my observation. So from the single family standpoint, I don't think you're seeing this appreciation or this rapid appreciation driven by banks not acting nice or
Mhm.
doing things they shouldn't do. I think it's driven more by the fact that we're having a huge migration of people from other areas in the country into a concentrated areas of the country. I think you're seeing interest rates are driving that. I think you're seeing the lack of new supply from builders.
Mhm.
Builders took time off in 2020 due to COVID. Um, the cost to build is really high right now, so
Yep.
builders a little bit more conservative about when they're going to build. New starts are low, so the supply is just low, and the demand for single family housing is really high. Um, so I don't think my wife and I were actually talking about this the other day, and she asked me, she was like, "Are we going to see a big bubble?" And I told her that what I thought was going to happen in the single family space is I said the rate of acceleration will absolutely stop. It won't, well, not stop. It will actually absolutely slow down.
Mhm.
So, you're seeing 14, 15, 20%. That's going to go back to 3 or 4, maybe 2,
Right.
right? It's
Right.
not going to I don't think it's going to drop. I think that the rate will slow dramatically at some point. On the multifamily side, commercial side, um, I think there are some people that are overpaying right now. I think there is potential for there not necessarily to be a bubble, so to speak. I think there is an opportunity for some people who have been buying over the last 6 months to a year to absolutely be in a bad spot, say in the next year to 36 months. And the
Mhm.
reason I say that is, in a lot of multifamily syndications, uh, syndicators are trying to exit a deal in 3 to 5 years. They're trying to provide certain returns in 3 to 5 years. And sometimes that strategy involves a refinance.
Right.
Well, if you're overpaying and your margins are thin, and you've done that on a 3.65 interest rate
Hmm.
for your property, if you turn around to refi and try to give your investors their capital back, and all of a sudden that interest rate is 5-6%,
Mm.
it's going to be harder to refi. It's going to be harder to give your investors their capital back and continue to cash flow the property after you refi it.
Right.
It's going to be harder. And hopefully syndicators are smart enough to say, worst case, we don't sell it or refi in 5 years. We hold on to it for 8 or 9.
Right.
Maybe that's what happens. I do think you're going to find some that are going to be in trouble, and going to have a hard time holding on to the property, a hard time getting their investors the returns that they promised.
Right.
Um, and I'm starting to see some of my fellow syndicators and partners adjusting to that. You're seeing less 5-year exit strategies out there. You're seeing more, hey, let's talk about a 3 to 5 year refi period, but we're going to hold this thing for 10 years, and the phrase I'm seeing a lot now are infinite returns, right? And what they're talking about is, hey, we're going to refi in 3 to 5 years. We're going to return our initial investors their capital back, their initial capital back, but we're going to hold on to it for another 5 to 7 years after that, and we're going to provide them cash flow and keep them and provide them. We're going to keep them in at their equity position.
Right.
So
Right.
you don't access their equity, but you do give them their capital back. So I
Mm.
invested 100,000 with you in year 3. I
So
give you that.
virtually their cost basis would be zero after an initial
Yeah.
period
So that's
with
where
you.
the infinite returns come from, right?
Right.
I gave you your $100,000 back for every dollar you make from here on out, it's free. It's free
Sure.
money, right?
Yeah.
Um, so the only downside to that is I only gave you your 100,000 back. I didn't give you the extra 100,000, right?
Right.
So you don't get that for a while, but you are cash flowing. You have your initial capital back. You can go deploy it somewhere else.
Exactly.
Personally, at 46 years old, I look at that and go, I'll take that deal all day long.
I'll take that deal. I'll
Yeah,
take that deal for sure.
I'll
I
take
mean,
that deal.
I do something similar with my own clients. I think we
Mhm.
talked about it earlier, but so I'm curious. So people can invest with you,
Mhm.
right? Do they have to be qualified purchasers, institutional, or can you literally take anybody?
Depends on the deal, right? Like
Sure.
and I hate that answer, man. I really do, because
I look, it's the same in my business. Look, I gotta, it depends. It
yeah,
depends for
yeah.
sure.
I get guys all the time. They're like, "Are you willing to do this?" I'm like, "Man, it depends." Depends on the deal, right? Um, so some deals. Are you talking about the difference between a non-accredited and accredited, and then institutional and things like that?
So, I mean, I
Um,
know what they are, but I'm thinking for the viewers, maybe if they're interested,
sure.
certainly, we can explain that.
So on some of our deals, we have a what's called a 506B, and we can include non-accredited investors. And basically, in a nutshell, a non-accredited investor is someone who has less than $1 million in net worth, or less than, oh, help me remember here. I think it's 200,000 in individual income or 300,000 in joint.
Correct. Yeah. And that you're also expected to continue to do that in the
Correct.
future.
So that's the barriers for, or that's the hurdle for a to become an accredited investor. So anyone under those metrics, the SEC changed it up just a little bit last year,
Yeah.
but for the most part, that's the hurdle. If you don't meet that hurdle, you're considered a non-accredited. So we have deals that are 506B deals, which we can take both accredited and non-accredited investors. The difference is, for a non-accredited investor, is I have to have a documented, established previous relationship with you, and for you to be able to invest with me.
Could
And I
that be
can't.
as simple as just a friendship or
Could be friends and family. Call it friends and family,
email,
right?
an email correspondence?
Yeah, I just, in some way, I have to be able to show that you and I, Logan, had a relationship in
Right.
some way before I ever told you about a deal. So before I
Okay.
ever tell you about Richmond, Virginia property, you and I have to have had connected in some way. Um, it's pretty broad. It's pretty loose. I think it works in both directions. I think it's pretty broad and loose, and that can be favorable to me.
Sure.
I think if the SEC really wanted to crack down on something, it's pretty broad and it's pretty loose. I think they could broadly apply it to me in some way.
Sure.
Um,
It's such a gray area.
yeah.
Anything with the SEC,
Oh yeah,
you're
man.
always trying to cover, CYA is what
Yeah.
they always say. Yeah.
So in a 506B deal, that's we have to have an established relationship, and the other restriction there is I can't go out on Facebook and openly advertise my deal. I can't
Same.
walk. I can't walk out into a Facebook group or even on my personal Facebook page and go, "Hey, got a property in Virginia. If you got 25 grand, let's talk." I can't do
Right.
that.
Right.
506C deal, which is only for accredited investors, I can do that, but I can't engage anybody who does not meet the accredited investor hurdle.
Okay.
So that's a 506C deal. Then you asked about institutional. I don't do a lot with institutional investors.
Okay.
I do work with some family offices.
Okay.
I do work with folks doing 1031 exchanges from time to time, those types of things. Those
Okay.
get a little bit different. Your deals have to be structured in certain ways. There's a notion called tenants in common. If I'm doing a 1031, I have to have a tenants in common in place.
Okay.
Um, and so there's a number of different things. If this all sounds a little complicated to you, it can be, and that's why.
It's a lot. It's a
Yeah,
lot. And
and that's
frankly, I'm sure you consult an SEC attorney on a lot of this stuff,
yeah.
and
I was
maybe
just
you've been through it enough where you know most of it. And
Yeah,
so,
I was just getting ready to say that's one reason I pay an attorney about $300 an hour to make sure I stay out of trouble. Um,
look, I've got a compliance department for a reason, for sure.
absolutely.
Mhm. So perfect. One other thing that's actually fairly recent is the recent capital gains hike that
Hmm.
President Biden had announced just yesterday, according to this recording. How is that going to impact you and your business? Have you thought that through yet? What's kind of going through your head when you hear that there's going to be a price hike up there?
So I actually just saw that yesterday. I'd heard, obviously we'd heard that it potentially was coming. I
Hmm.
think he mentioned it during the campaign. I
Hmm.
have not had a ton of time to dive into it yet.
Yeah.
I absolutely understand how it will impact things like stocks, those types of investments. I have
Right.
not looked into the details of how it could potentially impact real estate investments.
Hmm.
I haven't seen, when you're talking capital gains, that's such a loose term or such a broad term
Sure.
that, I'm not sure exactly what he's done on the real estate side to take away some of the benefits that you might realize through real estate, such as like cost segregation or something like that.
Hmm.
Because I can absolutely use cost segregation to offset capital gains, earnings, or whatever from real estate.
Hmm.
Um, but I can't use them, I can't use them against things like capital gains I've realized in the stock market.
Could you
Um,
possibly explain that You said cost segregation.
yeah, cost segregation.
Okay.
So in a nutshell, what we really need to do is get a guy like Yona Weiss on here to talk about that because man, he is the cost segregation expert.
Okay.
Um, but in a nutshell, when I buy a property, I pull in someone like Yona or
Mhm.
similar, and they do a cost segregation study, which
Okay.
is basically they figure out what the value of my property is, what I paid for it, and they allow me to take a significant, I believe, up to 60% in the year one, basically show up to a 60% loss on that property in year one. It's essentially accelerated depreciation, is at least how I think about it.
Okay. Okay.
Instead of taking depreciation over 20 years, 30 years, whatever, I can figure out that price, take it in a big lump sum over a number of years at the beginning rather than spread it out, peanut butter spread it out over a number of years.
Right.
Um, but
Right.
it can be pretty significant. I just on a small investment, I put $25,000 into a property, and just based on the cost segregation study, in year one, I was able to realize a $12,000 offset tax deduction for
Okay.
any capital gains, I'd made through real estate for just that $25,000 investment in a property. Um,
Nice.
so that's pretty significant, you know.
That's huge.
So
That's huge.
now imagine if I had invested 100,000 or 500,000 in something.
Right.
Um, then all of a sudden then all of a sudden you start to realize why like a lot of these guys like Trump who do a lot in real estate paid like $7 in taxes or whatever it was, like $70, $700, whatever it was, some ridiculously low amount.
Sure. No, that's wild. Absolutely. Now, other where I would like to pivot is into if somebody young who's watching this wants to kind of get into what you're doing, how would you recommend, I don't know, a 23, 25-year-old get started here? Would you say maybe real estate or maybe start with a firm like yours and then maybe branch off? What's kind of the career trajectory there?
I gotta be honest. Hey, back to it depends.
Sure.
It depends on the person. It depends on what your goals are. I don't think there's a wrong answer really, other
Yeah.
than the single right answer is do something. If you know this is something you want to do, even if you're not sure, do
Hmm.
something. Check it out. If you don't like it, go do something else.
Hmm.
Um, but the biggest thing for me is make progress towards whatever that is. And if I was looking at someone who's 20 something years old, the very first thing I would tell them is read as much as you can and go find a mentor.
Hmm.
Um,
Hmm.
and whatever that mentor is, whether that's someone that's established that you trust, that has good reputation, you pay them a little bit, that's fine. Or
Hmm.
walk into a syndicator's office, call someone up, call someone like me, call someone like Robert Musso, Mike
Hmm.
Ely, Joe Fairless, whoever. Call them up and say, I'm really good at this, or I'm located in Charlotte, North Carolina. I can be boots on the ground for you.
Right.
I can go walk properties. I can put eyes on properties. I'm really good at numbers. I have an accounting degree, and I love diving into Excel files,
Right.
um, and numbers. So call them up, offer whatever you think you can do to add value to them. Call them up and offer that.
Mhm.
One of the ways I got involved in one of my first big multifamily syndications was the guy already had it under contract. I went to him, met with him, and said, I think I can help you raise money. And I didn't do much else on the deal other than help him raise capital to close the deal.
Nice.
And that got me a GP position on the property, and I'm still earning money from it today. So um,
The best of all worlds
yeah,
right
yeah, yeah.
there, for
So
sure.
I think the takeaway from that is if you want to do it, figure out a way to get involved,
Mhm.
and don't be afraid to go out there and talk to people, network, find a mentor, and offer your services in whatever way you think you can help.
For sure. You know, I said this on my last podcast, never be afraid to ask.
Right.
You'd be absolutely surprised for how many people are willing to just help, offer advice, respond. you know,
Hmm.
just ask. You'd be absolutely surprised, and especially when it comes to just asking for advice and everything. I mean, look at myself. I reached out to you on LinkedIn. I said, "Hey, would love to connect. Want to hear about what you're doing," and that's really it. I'm curious about this market. I see
Right.
people making money there. I see that they're very successful. What was the catalyst to get you there? Why did you choose this over going another industry? Asking all these questions is for me is going to help me down the road and establishing where I need to go or see if I need to get into that business and I'm hoping a lot of people can see that where if they see a trajectory that they want to go, just
Right.
ask. You'd be absolutely surprised. Nobody's going to be, especially on LinkedIn. Everybody's so polite on LinkedIn. But I've never really just had somebody be like, never contact me again.
No.
People aren't that rude. They might just say no, thank you. But that's the worst it's going to get. And
Yeah.
I'm happy with a no, thank you. No
Yeah.
problem.
Yeah.
You know,
Because quite frankly, most of the guys who are doing this stuff, they've gotten here through exactly what we're talking about. they didn't start off on by themselves. You know, they
Mhm.
had a mentor. They came up through the ranks in some way. And you know, everybody seems to be willing to help each other out. Like because it's like you're saying, it takes a team,
Mhm.
and you never know when you're going to come across a good team member. So you never tell anybody no.
Right.
It's, you know, in fact, a lot of times when I reach out to somebody, the very first thing they say to me is, "How can I help you?
Mhm.
What can I do for you?"
Right.
And then pretty natural response, you know, and a natural follow up to that from them is, "Now what can you do for me?"
Mhm.
You know, there's a give and take, there's some tit for tat, but it's absolutely like, how can I help you and how can you help me? If you can establish something there, then you know you're pretty much going to end up with a decent partner, you know.
Exactly.
And you know, just be willing to help. You know, one of the guys that I work with today, who's a CPA, he reached out to me probably about 6 months ago, and
Mhm.
the guy's amazing at analyzing deals, amazing, and he didn't have an idea of like where to start. And I'm like, man, you're amazing at this. You're great. Like, I've sent you a couple of things and you've pointed out things I never would have thought of.
Right.
Like, right there, that's your value.
Mhm.
Call every syndicator you're interested in working with and tell them, you know what, I'm really good at analyzing deals and I can speed up your underwriting. So
Right.
feel free to shoot them my way. I'll give you my, and I'm not asking for anything. Shoot them my way. I'll give you my feedback.
Right.
Um, and somebody will pick you up. If you help them out, they're going to get you involved.
Yeah. They're going to think of you the next time that they're looking maybe even to hire or do anything
Mhm.
else. They'll be thinking of you because they know that this guy can actually do the work.
Yeah.
Networking is absolutely huge. Um, that's how I got my job in Santa Fe, New Mexico, when I was working for Thornburg Investment Management. Um, I happened to know somebody there, and we had talked previously over the past couple of years, and he offered me the position. I was happy to take it. It certainly helps out. You know, your career trajectory, as I was
Sure.
mentioning, for sure. Um, so, like to pivot again back into your kind of targeted demographics right now. Greenville, you had mentioned, and even Alabama, which was interesting to me. Can you tell me why those areas are kind of lighting up for you?
Yeah. Yeah. So Alabama and certain parts of Alabama. So Greenville, because I'm in Charlotte, and like you said, people are coming south. People hit Charlotte and then they go south.
Mm-hmm.
Um, you know, a big company did that a while back. BMW, when they were looking for a place to put a plant,
Mm-hmm.
South Carolina offered them reasons to do it. They put it right there near where you are in Spartanburg. It's been great for the economy there. It's been a big reason that Spartanburg and Greenville has seen the growth that they've seen, right?
Right.
So Greenville has a um, Greenville has a pretty cool vibe. It's got the types of jobs that are there. It's attracting millennials.
Yes.
That's been a big part of the growth in Greenville has been millennials moving to the area. Go over to Alabama. There's a little town there. It's not small, but there's an area there, Huntsville, Alabama.
Okay.
And I'm with you. The first time I thought of Alabama, I was like, you know, cool place. It's on the Gulf. Don't know much about it. Then all of a sudden, I visited Huntsville. I was like, man, this is a cool town. Like
Right.
if I was a 20 something, early 30 something, I'd live here. Like, lots of stuff to do, great jobs, tech jobs, defense industry jobs,
Hmm.
high paying jobs. Um, and I never would have guessed that about Huntsville in a million years. And so until I visited and I started to look into it. So
And cost of
Huntsville's
living's pretty low too.
for now,
Yeah. For now.
for now.
Okay. Good answer.
They keep throwing $100,000 plus jobs in the town, and it's not going to stay that way.
Right. Right.
So hey, by the way, if you're an investor who hasn't heard of Huntsville, which I don't know of many, you know, stay away. Don't. It's no good. Um, leave some stuff for us. But that was my introduction to Alabama. I saw Huntsville. That made me kind of think about it, and then I ran across a syndicator in Mobile,
Okay.
and he started to talk to me about Mobile because that was another one of those I didn't know much about. Then I started to realize the jobs that were coming into Mobile, the blue collar jobs that were in Mobile. And by the way, blue collar jobs in the syndication area are is, man, you want to talk about gold mine, steady cash flow,
Hmm.
because blue collar jobs produce a lot of renters. Um, and they're not going to pay the 1,700 a month luxury prices, but they will pay those standard rates all day long,
Right.
and they will be long term tenants.
Consistent. Yeah.
Yeah, they tend to stay somewhere in a property for years.
Hmm.
And give me somebody who stays in a $700 a month apartment for 5 years versus a luxury apartment for 9 months or a year, all day long.
Hmm.
Um, but Mobile has a strong blue collar workforce. It's gentrifying. It's growing. Um, it was one of the reasons why I did one of my first LP investments in that area. So that's one of the reasons I like Alabama. There's also a section there which I'm not in. I would love to be in Hoover, Alabama. Great market, some of the best schools in the country, and people seek out Hoover, Alabama as a place to
Okay.
live.
I was gonna. And nothing against Alabama.
Yeah, I know where you're
But
going.
I've
I know where you're going.
seen some of the
I know
educational
where you're going.
reports there. That's interesting. Is it
Hmm.
kind of just centralized in that Hoover area where they have really good education?
Yeah, yeah. There's money.
Okay.
There's money. Good schools. Lots of jobs. It's a really good spot.
Yeah. Raleigh always seemed like a really nice spot to me too, but almost to the end of where it might just be overvalued. Would I be right there?
I don't. Raleigh's tough. I don't know if it's overvalued, but it's certainly outside of the price that I want to go into.
Hmm.
It is a tough value. It's a competitive value, and
Yeah.
don't take that to think that we shy away from competition,
Sure.
but competition can cause prices to skyrocket, right?
Mm.
Raleigh is a strong, strong market. It's not going anywhere. You see these companies moving out of California. Well, if you look, there's a lot of crossover in companies that are headquartered in the Silicon Valley but have their second headquarters in the Raleigh area.
Hmm.
Um, so those companies are going to naturally migrate some of those jobs into Raleigh. Raleigh's going to continue to grow. If I was looking in the RTP area, I'd focus more on like Durham.
Yeah.
Um, Focus more on Durham. I'd start to look out a little bit into, say, Hillsboro, some of those secondary, tertiary areas around Raleigh. Just
Hmm.
kind of like you're saying, Gaffney, South Carolina, 45 minutes from Charlotte. I'd start to look in places that are 30, 45 minutes outside of Raleigh.
Yeah. Yeah. When I was living there for my short stint that I was there, I started in Cary, North Carolina.
Hmm.
I just was renting out an apartment there, but I would drive to Durham every once in a while. And I was actually, I loved Raleigh. I thought downtown Raleigh was a lot of fun, but I felt that Durham was a little bit more interesting for some reason. And like you said, maybe it wasn't as, I don't want to say not as developed, it's developed, but I felt that there was more opportunity there to be had.
Oh, yeah, sure.
There in Greensboro, a lot of my friends have talked about that's an awesome spot to live. Never been, but maybe I need to make a trip up there.
Yeah, so now you're hitting one of my favorite areas in North Carolina. Um,
Oh, maybe we shouldn't talk about it then.
no,
Maybe
talk
you're
about it
working on
because
something.
I own some stuff in the area, so talk about it. I want to see those prices go up. So Charlotte's great, Raleigh's great. Um, I think the value, if you're looking for value plays,
Mhm.
Greensboro, Winston Salem.
Yeah.
Um, there's also some areas around there, High Point and Burlington. I think High Point and Burlington are a little tough right now.
Hmm.
Greensboro and Winston Salem, to me, are very safe plays with a lot of upside.
Right.
Um, like you're saying, you're starting to see people say Greensboro is a cool area. Greensboro is a cool area to live. 10 years ago, you probably didn't hear that much.
Right.
It was seen as a little bit run down, um, trying to find itself, trying to transition. Winston-Salem, absolutely 10 years ago. Um, I personally lived in Winston-Salem a little over 20 years ago. And as a 25-year-old at the time, it was not where I wanted to be. I go back
Mm.
there now because both my brothers live there. And I'm like, man, even in my 20s, I would live here. This is a
Yeah.
cool spot. They've done a lot with the old tobacco mills, the old textile mills. They've done a lot to repurpose those, make them really cool spots. Um, I mentioned Huntsville, Alabama before. To me, Winston-Salem could be another Huntsville, Alabama,
Really.
if the right things fell into place. They have similar bones, same kind of towns from historically,
Mm.
and there's a lot of just really cool things. You don't need to go in there and build a brand new ultra modern
Right.
something. You can repurpose like the old mills and the old buildings that they have there. Has a lot of personality,
Hmm.
lot to offer.
So that's primarily what you kind of target, right? Not maybe not so much, and maybe you do a little bit of actual building new buildings,
Hmm.
but primarily where you see the most value, especially right now, you're going to look at an already existing property. You're going to go in, try and renovate it, make it up to your standards, and that's kind of maybe your more everyday kind of practice, right? Or is it kind of just all across the board where you're looking, where you're building stuff, you're renovating, you're,
It's
looking at
it's
new stuff?
it's all across the board.
Hmm.
But our bread and butter is certainly taking existing properties,
Mm.
bringing up to a certain level,
Right.
what they call add value, bringing them up to a certain level, and holding them. Um, I do have a little bit of a passion. I have a passion for two things. One, building ground up. I one of my big goals is to do a ground up development 100% all the way through. And then I have a passion for, just because I've been in the South my whole life, some of these old buildings, these old mills, these old
Right.
warehouses and stuff from the late 1800s, early 1900s, taking those and doing something new with them. I have a passion for that.
Hmm.
Um, that's somewhere I want to get to eventually, is to be doing that more and more. But today the bread and butter is more of taking something existing, a 60s, 70s, 80s build, bringing it up to modern standards, and then holding on to it.
Right. Right. And that's one thing I really like about what I'm hearing is you're more long-term cash generating investments for the most part. Um, no, what would you say is like the big difficulty of your job though? Would that be getting in tenants to come in and, you know, into the buildings? Where do you find the hard part um, that can kind of stop the process a little bit?
Yeah, so I don't have anything that I don't personally have anything that I can't put property management on, professional property management. So I don't
Mhm.
handle a lot of the tenant issues or the
Okay.
lease ups or things like that. I certainly oversee and work with the property managers as needed.
Right.
But for me, where the hardest thing, the biggest issue for me, at least in the last year or so, has been finding deals that work,
Yeah.
um, sourcing deals. And you mentioned the person that wants to get started in this thing. Just keep in mind, when you're getting into this, finding deals, getting deals is a high volume, low success game.
Right.
Um, just to give you some numbers,
Mm.
just in the last 2 months, we have cold called over 2,000 owners of properties. Out of that, we have, I think, 3 leads right now that we're working on. So
Wow.
2,000 cold calls, 3 leads. We probably will end up with 1 or 2 deals out of that.
Right.
High volume, low success. But man, when you get one, man, it's exciting. It's really exciting.
Oh,
Love
I
getting into
bet.
it. And then they can be highly lucrative when you do get one.
For sure.
So just keep in mind, if you're trying to get into this thing, it is a grind. It is
Mhm.
absolutely a grind. But man, it can be a fun grind.
Will you cold call anybody, or is it only people that have a for sale sign on their property? Or will you just see a property and be like, who owns this? I want to buy it.
Yes, all
Both of
of it.
those?
All of it. So we pull lists. We pull lists of property owners.
Yeah.
So we'll pull lists from different places based on certain criteria, and we will generate a list of just hey, there's 1,000 properties and here's the owner's name and number.
Okay.
Or sometimes we'll see something for sale. There's a property about 15 miles from my house right now that I'm
Mm,
going to call on today. It's got a for sale sign in the front yard. Who knows, but I'll call.
right.
Um, and then on the other side of that is there's just on a personal level, there's an apartment community about 2 miles from my house that I have been looking at for years.
Yeah.
And just, I guess about 6 months ago, I was like, you know what, I'm going to figure out who owns that thing and I'm going to call them.
Mhm.
And I did. And it's not for sale, at least not today. But like you said, I drove by it, saw a sign, looked it up, did my research,
Well,
found the
but
owner.
see, the nice thing to that is that you've already established the relationship with the owner, right? And so when the moment does come where he's like, I want to get rid of this, he knows somebody who is at least interested. Maybe it was a couple of years ago, but he'll probably give you a call and saying, "Hey, I'm starting to offload this now. You want to talk business?" May or
Yeah,
may not happen.
no, no, absolutely. That happens.
Mhm.
And then probably the more likely scenario is, so I called him. I have notes here. I'll probably call him back in
Sure.
6 months or so. And then eventually one day, maybe I'll make that call and he'll be like, you know what, I am kind of ready to sell.
Yeah.
Um, but either way, and then sometimes it has nothing to do with his property. We're all networked. We all know each
Exactly.
other.
Mhm.
He may have a buddy who says, "Hey, hey, Logan, you know what? I'm really tired of doing this. I'm ready to go sit on the beach with my wife. I
Exactly.
want to sell this property."
Yeah.
And that guy I called may go, "Hey, you know what? A guy reached out to me. Let me connect you."
Yeah.
And I've had that happen a couple of times. Is
Mhm.
somebody else connected me with somebody else who actually had something to sell.
Exactly.
Um, so yeah,
Which it all comes full circle. That's why you got to network. That's why you got to talk to people, and
yeah,
it's super super important. I think that's all I have for you today, man. I really appreciate your time and your insight and all of your knowledge. I'm sure so many people are going to be interested in what you've had to say today. I really appreciate it. Is there anything you want to say to the viewers? You can plug anything, your LinkedIn, your website, or whatever.
yeah. So if you're looking for me or you heard something you like and you want to chat about it, tvest at harvestpg.com.
Mhm.
Same website, harvestpg.com. Actually launching a new website here in about 7 more days.
How are you? Okay,
Yeah, so
nice.
so check that out. Or always find me on LinkedIn. I'm on there quite a bit.
Yep.
And other than that, yeah, man, I appreciate you having me on.
Yeah.
Thanks for the connection, and so it was a good chat.
Yeah, definitely. We'll stay in touch for sure. I might even have some people interested in what you're doing. But I really appreciate your time. Thank you so much for joining, man. I appreciate it.
Yeah, thanks.
Hey, thank you.
All right.
Bye.